Yo, what's going on everyone? Hope everyone's doing well. Welcome to another video. This one is going to be on refining entries and no long talks. Let's just get straight into this. So before I get into what refining entry is and how we do it, I like to do a quick little overview of every single thing we've learned so far. So I'm going to start from the basics up to the advanced. So right now, brand new chart, right? This is the before of how I caught this trade entry that I'm going to take you guys over. Well, I'll explain all this stuff right now. So first things first, how do I identify the trend? Overall, I just draw a line like a flow, and the flow is moving up, right? So the flow of the trend is moving up. Now let me mark up my swing point higher highs and higher lows to see what the overall movement is like. So we have a swing point low right here, we have a swing point high, swing point low, and a swing point high. Let me just go back into replay mode right over here. So boom. Now, so we have those swing point lows, swing point highs. And now, like I said in my last video, or not my last video, but in the institutional candle video on which one is stronger, you want to go for those institutional candles that were responsible for those major moves up and those major breaks of structures. And if they're in the Fibonacci blue value zone, it's much more stronger. So in this case, here to here, we see that this is much more stronger, this institutional candle, because one, it's inside the 3 blue Fibonacci zones and it's deeper, right? Deeper means discounted. And one, so it's in the Fib zone. 2, it's responsible for so much momentum, right? It gave you a crazy 465 pip move up. 3, it gave us a continuation of structure towards the left. And 4, overall we're moving higher and we're in an uptrend. And if we look at session wise, maybe if we go down to the 15-minute, we can see that the overall move started up in London session. So we can technically say we have, session by our side, because time wise, overall structure happened, every single session was moving up. So we have multiple confirmations now, right? So I started off with the basics of understanding what my trend is. Now my trend is bullish, and I found out which order block I'm going to use. Now we have, people might ask the question like, okay, what about this order block right here? Now, basically, the idea is every single institutional candle works. Not on every pair, but on GP pairs they do, if you're trading with the trend. Now, they're not all going to give you crazy 400 pip moves like this one or this one, but they're definitely going to give you intraday opportunities. So, for example, this one right here moved about 77 pips off of this last down candle before the move up, and then it continued going lower. So you'll definitely get intraday opportunities, but you won't be getting crazy 400 pip moves. And yeah, so yeah, just keep that in mind. So this institutional candle did not work out. Now this tells me that banks have a greater motive to go lower and react off of a lower institutional candle rather than the one higher, right? So the last institutional candle that's there is this one right here, this last down candle before the major move up. And this is also the start of that major move up as well. So at this point, what I would do is I would highlight my rectangle or my zone, which would be right here. This would be my institutional candle, this last down candle before the major move up. Now, if I highlighted this zone, you can see that this is a 44 pip zone. So if I'm entering at the open, right? Let me take my long. So I'm entering at the open right over here, and my stop loss is at the low. So that's 44 pips. And take profit wise, I'm literally just targeting take profit wise the next high for like 406 pips. So that's about 9 to 1, which is really good, but no one wants to be risking 48 pips or 46 pips, specifically because even though it's still 1% of your account, because we're using proper risk, that means that we have to use a smaller lot size, which means less money. So we want to be sticking to smaller stop losses. And the way we can do that is by refining this order block to a smaller time frame order block. So let me show you guys what I mean. So we have a 4H higher time frame OB. Now what I'm going to do is I'm going to go down to the 3 hour, and I'm going to try to refine that order block down to a smaller order block. So now I can refine it up to here, this last down candle before the major move up. And now I literally just refined my OB from 10 pips, I'm assuming. So before it was 48, now it's 34. That's like 14 pips I refined it by. So now we're risking less. Now if I go down to the 2 hour time frame, we have another area of interest being this last institutional down candle before the major move up, and this last institutional down candle before the major move up. So let's see how much I refined it by now. So now I refined it from 36 pips up to 21 pips, and this one is refined up to 15 pips. So basically, even though I was first risking about 46 pips, I literally just refined it down up to like 13 and like 26 pips. And even though we have two areas of interest, one being here and one being here, it's completely fine, because at the end of the day, if this one does get stopped out, we still have the second area of interest to focus on. So now if we go down to the even lower time frame, like the 1 hour, we can refine that area of interest to this last down candle before the major move up. And now I refined it to like 13 pips, right? And same thing goes with this likewise. This one I just refined it up to like 10 pips. So now we have two areas of interest I just refined it up to. Now we can go down to the 45 and try to refine it even more. In this case, technically we wouldn't be able to refine this even more, because if we did refine this, it would be a little bit more pips. Like, yeah, that's 19 pips now, so it makes more sense to stick with the one that's less pip value. So in this case, I'm sticking to the 1 hour. Let's go down to the 30 if we can do anything. 30-minute wise, let's see. 30-minute wise, we just refined it up to 12 pips. So same thing, 1 pip difference. This one we refined it up to this would be like 5 pips or something. Yeah, I refined this up to 6.5 pips. We'll go down to the 15-minute time frame, see if we can refine this even more. 15-minute wise, boom. We cannot refine this more. So this is a really small stop loss of 11 pips. If we keep on refining and refining up to the point where we're risking about the smallest amount, one of two things are going to happen. One, you're going to get stopped out because of spread. Or two, you're going to get way too accurate with it, and price will literally come up to like 1 pip away from your entry, and then from there it'll just like completely shoot up. And like we talked about into psychological, or we're going to be talking about psychological levels, we can see that this is a psychological level, 149, 100, and this is a bank level that the banks are trading at, and we can refine this up to 148, 990 right here. So now we have psychological confirmation, and we have a refined entry from 48 pips up to 11 pips. Now let's look at our risk to reward. I'm gonna delete the lower entry just in, because I already know what's gonna happen. So right here, our entry is gonna be the open, and our stop loss is literally 11.6 pips. Now let me just make this a little bit nicer. Stop loss level, boom. So 11.2 pips is what we're risking, and our entry is 149, 100. So now we're risking just about 11 pips, and we're going for an overall target of 434 pips, and that's a 39 to 1. And you can see this is, I called this out couple months, or last month, April 23rd, 2021. This is the time, called it out perfectly. But yeah, so now we have our entry, confirmation, everything. Now let me actually show you the overall execution of what ended up happening. So boom, right here. So now that after price came near our area of interest, one thing every single trader is going to see is price is going to consolidate a lot and right beside your area of interest to induce you to buy before it taps into it. So it's basically saying, oh, look at me, I'm consolidating. What if I shoot up right now? People start getting fear of missing out, FOMO, and you end up taking buys over here instead of over here, and you get stopped out. Now, because we're institutional traders, we know that this is just liquidity. From the high to the low, this is all just liquidity. We have money resting above, and we have money resting below. We have resistance traders taking sells, and then we have support traders taking buys. And we know that money rests below. And now if there's liquidity inside or above or below your areas of interest or your points of interest, that increases the probability of your order block or your point of interest, whatever you want to call it, play out by a ton. So what we're expecting is price to come down to take out the liquidity below. And when everyone is looking at this as a good opportunity to get in for buys, there's all these people getting in at this range to buy. What they're doing is they're setting their stop losses inside of where we're looking to enter. So just imagine this: the banks hate when we enter at the same time as them. They want to enter alone so they make money and we lose money. If every single person is buying over here and their stop loss is over here, our institutional traders theology is where we want to see price break down. We want to see price action go down like this, in order for price to continue going up, because we're getting in when everyone is getting out. So when the market moves down, it's stopping everyone out, and that's when we're getting in. When majority of the people are scared, we're getting in for opportunities to enter. So this is a good sign that the market overall does want to react off of my area of interest. Now right here, we can see that price action wick below. You can technically see that this was a liquidity grab. Now after we did get that wick below, we see price action move up, right, taking out the liquidity of the highs and breaking structure towards the left. Now because we did break structure towards the left, technically speaking, this area of interest right here, this last major down candle before the move up, is valid. I would definitely be looking to enter on opportunities over here, and in all honesty, I was. So from this, I'd be going out to the 1 hour time frame, and I would refine that 4 hour block up to this one right over here. And I didn't refine this anymore, because if you do refine your areas of interest by a lot, most likely you're going to end up missing out and price will move away without you. And then I also was focusing on this last institutional candle over here. So now I have 2 areas of interest. I was still focusing on this one, right, but I was less interested in this one. Rather, I was more interested in getting involved right over here. So price action tapped me in, so my entry did end up getting filled, and stop loss was at the low for just about 19 pips, and TP was the next high for about like 181 pips. So I did get filled in, but then what ended up happening is the market tanked and broke past this order block. And what this told me is that the market now has the different interest, different objective to use an order block below. So in my head, I'm thinking, okay, what about this one, right? Now, I didn't enter right away. This time I didn't enter right away. I looked for confirmation. The confirmation wasn't there. And then I saw that price action broke below this order block. So then my overall like idea and ideology was that, okay, I still have my 4 hour / 1 hour last down candle before the move up on the 1 hour. If this one doesn't play out, then overall we're bearish, and now the market is definitely going to be bearish. If this one plays out, then it plays out. Right here, let's go down to the 5-minute time frame. What we can see on the 5-minute time frame is price action created liquidity, right? It created a ton of liquidity right over here. We have this area of liquidity forming right here where people are buying. Look at the session time as well. This is Asia session liquidity, like I talked about in my session video, or you guys get to that in a bit. But session wise, we have session liquidity resting below, Asia session money resting right over here, and then I still have my area of interest towards my left that hasn't been tapped into. So London session open, the market pushes up, manipulates a bit, and then it goes down to do what? To take out the liquidity of the Asia session buyers. Once those Asia session buyers got stopped out, look at this. Our entry got filled to the pip with a stop loss at just about 11 pips and a take profit of 413 pips. And if we look at like how big of a risk reward that is, as basically like that's literally a 37-1, and this isn't a cap. Like you guys can see this right over here. I called this out. And amazing profits on this one, amazing profits. So price gets filled in, and what I want you guys to notice is that after price action, before price action filled me in, look at how much my risk to reward changed. Before I was looking at entering on the 4 hour block, which was up to here, and stop loss at the low, and that's 45 pips I'm risking. Now I'm only risking about 11 pips, which is amazing. To me, that's crazy. It's crazy, and that's how you catch these sniper entries. If I entered right over here, my entry would have been right over here, and I would have been in drawdown for a while. But because I refined my 4H order block into a 1H order block, I was barely in any drawdown. Like let's measure how much drawdown we were in. Literally 3 pips of drawdown, which isn't bad at all. I couldn't handle that. And it helps your psychology as well, because the trade goes your way really quickly. You don't have to wait. It automatically goes your way. So let's end up playing this out and see what ended up happening. And obviously take profit did get smacked. We ended up bagging a lot of money in, moved stop loss to break even. We took 50% off, and overall it was an amazing trade, amazing trade, right? And if we were looking to get involved in buy side opportunities on GJ right now, I would be focusing on 2 areas of interest right now, and hopefully you guys would understand why. One being this area of interest right over here, because this is the start of that major move that broke structure towards the left. So I'd be focusing on this one and this last down candle before the major move up as well. because this is that last institutional candle that was responsible for that break of structure as well. So we have two areas of interest. Now this area of interest right here, this one has more candles than the wick, so I take it like that, and it's already so small, so I wouldn't really need to refine this anymore. 13 pips, if it's really small, you don't need to refine it, keep it up. But this one, we have this major big candle. This is way too big. This is about like 50 pips, 45 pips. At this point, I'd go down to the 1 hour time frame and I would look at refining this entry by a lot. So now we can look at two areas, one being this last institutional candle, and this is refined to like 17 pips, so we refined it from 50 pips to 17 pips. And if we go down to the even smaller time frame, like the 45, we can refine this up to this one right over here. So now we have two areas of interest. This one's 28 pips, not bad, still a little heavy, so we can go down to the 30, refine this even more. And now look at this, now we can refine this up to 12 pips. So now we have two areas of interest, 1, 2, and these are both refined. And notice how this is the exact same setup as this one over here. We had one area of interest right here, the second one right here. Market broke structure, continued going higher, and boom, and it ended up hitting TP. So same thing right over here. We have that same setup. We have our two institutional candles right here, one being here, one being here. If we get stopped out of this trade, we still have that second trade opportunity. Now overall structure is also bullish, so this does correlate with our with our trend and everything. So that's how I basically refine my entries. If anyone has any questions, oh, by the way, before I end this video, the entry video that I made on macro structure versus micro structure, I want to show you guys something. When you have an overall area of interest, let's say the market came right here and this is my area of interest right here, I'm waiting for price to come back here. As soon as price comes in, you can do two things. You can either enter right away, which I don't recommend because there's no confirmation with that, or what you could do is go down to the smaller time frame and look for invalidative structure. What I mean by that is you want to see bullish pressure now. As soon as price comes into your area of interest, you want to see price action move away from it. So you want to see something like this happen. Now when that does happen, you want to look for breaks of structures towards the left. In this case, we have that break of structure. Now once we have that break of structure, what we're going to do is we want to focus on this expansion that was responsible for this break of structure, right? And inside of this expansion, we're going to find second order blocks, another OB or institutional candle that we're going to be focusing on. In this case, let's say we have an OB right here and an OB right here. We would set limits for both, 1%, 1%, and one of these would 9 out of 10 times play out. So this allows you to refine your entry from like 28 pips to about not even like 11 pips, and this is like 14 pips. So this allows you to refine your entry as well. That's another way of refining it. These are both ways of refining it. Always refine your order blocks. Never ever take the whole entirety of the order block unless it's like something like this. If it's something like this where it's already small, you don't have to worry about it. You could definitely just use this one. But anyways, thank you guys so much for watching. I hope this video was helpful. Take care, take some notes, and I'll see you guys in the next one. Peace.